Well, what a shocker Netflix has just come out with. We're going to go through this today. Netflix has just given the Bulls a big, massive uppercut on the Bears. It's like a boxing match, and a boxing match that the Bears have been in control for the last few rounds. They're getting a bit lazy now because they're thinking, oh, this is a little bit too easy. And then what Netflix has done for the Bulls is when they weren't ready for it, boom, they got one back on them. And we're going to go through today about why this is such a positive sign for the Bulls at the moment. If you are a Bull, you want to have caught them Netflix earnings, because there's actually a few other stocks. Actually, I believe it was American Airlines, Adobe was another one, but there's a few companies at the moment that are just sneaking out a lot of positive news at the moment. Now the thing is when you look at Netflix at the moment, it's currently, let me just refresh this because this was before pre-market, it's currently up 14% today at the moment. The stock is up 14%, and that comes off their earnings report that they brought out last night. And you see here Netflix gains 13%, well, they went up 14% off earnings beat. Now it doesn't have the full details down here, but this was actually a really impressive quarter from Netflix. This comes off a quarter which a while ago saw the stock absolutely tank, and this quarter was really positive because they had an EPS beat, they had a revenue beat, they had members or subscribers beat as well, and they also guided in the longer term a longer beat on them user growth as well. So this was really positive stuff, because what we've seen Netflix has really been priced as a bit of a dead stock in the last few months. If we have a look at the share price here, Netflix went from being a $678 stock here from where I've got my mouse on at the moment, and you can see here that we had the drop off earnings, then we had the other drop off earnings, and Netflix was down 73% after these earnings. So in under a year, Netflix lost 73% of its value, and at this point here you can see Netflix was starting to get valued at the same sort of prices it was at in 2017. This company had 5 years of share price appreciation wiped off Netflix. You know, people looked at Netflix and went, oh yeah, it's a dead platform now. You know, when Netflix was having that drop, it was unbelievable to see the amount of people that said, that's it, Netflix is dead. And these earnings were anything but that. They were very strong earnings. And since that period of time now, Netflix has had a pretty decent run up, over 55% up. And in fact, I still think it's probably not too bad of a valuation here at the moment. Now, personally for me, I never went into Netflix on the dip. I was very, very tempted, but for me personally, I just prefer Disney, and that's where I prefer to put my cash. But I've got to say, even I was looking at Netflix when it was, you know, 140, I should say $162 with a 52 close. Even I at that point was like, I'm actually really tempted for Netflix here. And if you did jump in that Netflix drop there, obviously you're doing very well from the drop that's happened here. Now this is key. Why is Netflix delivered such a big uppercut to the Bears? Well, this is the thing. Netflix, if you look at Netflix at the moment, it lost, you know, over 70% of its value. You know, stocks at the moment are priced at levels like a financial crash at the moment. And you look at something like on a historic metrics like what Netflix is at, you know, at the moment it's down at a 3 on total enterprise revenue. Normally it's been between a 6 and a 7, so normally double than where it is right now. Total enterprise value, you can see here that it's currently down at a 17. Normally, if you look historically, it's around about a 30 or 40, so same again. That's normally double where it is right now. Most of the metrics are double, normally historically on average double where they are right now. Now there's the key argument here, that Netflix was at a little bit of a richer valuation. I can 100% agree with that. It probably was when it was at them sort of, you know, highs of $600-$700. It was probably a little bit of a rich valuation. It's deserved to have a pullback, and as well as that, you know, it's had a few quarters that haven't been amazing, and it's probably having a bit of a pullback. And when you look at the financials, they are going to have a bit of a slowdown this year in revenue, maybe a little bit of a slowdown in profit by 10% this year. But when you look at Netflix as a whole, and this is the same for so many stocks out here, Netflix lost 70% of its value. 70%. For a company that's going through a 10% slowdown, it deserved to lose 70% of its value. It was unbelievable. And it's not just Netflix. There's plenty of stocks out here. This is just the first one that's come out this earnings season and reported, you know, very decent numbers, given good guidance, and then the stock's up 14%. There's a lot of stocks like this. There's a lot of stocks that have been ridiculously valued, and Netflix had priced in a financial collapse out there. And it was stupid, and no wonder Netflix is jumping up 14% today. There was a few other stocks that are very much like Netflix at the moment, half the historic averages, and there's no wonder people are starting to jump into these stocks. And even so, Netflix having such a good day right now, it probably still should be higher, and there's other stocks out there. This is what we got to at the point where Netflix was valued as a dead stock. It was valued as a dead stock, a dead company, and now it's starting to have a bit of a jump. It's no surprise, and this is the big thing. This is the thing at the moment. The bears have compressed prices so low at the moment. A lot of these stocks only have to come out with pretty okay numbers, and we're seeing stocks jump up because they've had 70% crashes on the share prices. And tonight we have Tesla. Be interested in something similar happens with Tesla. That's priced in a 50% crash on the share price. What happens if Tesla comes out with okay numbers, guides okay, a bit of a beat on the profit, bit of a beat on revenue? Exactly the same there. We have the same with Snapchat this week. Same again, a lot of negativity pricing there. What if they come out with okay user growth, okay profit, okay revenue? Same again, do we have a lot of these stocks at the moment set to have a boom? And at the moment, this is what happens. The bears have massive control on the market. And we were talking about the other day that Bank of America came out, and they said that for what everyone's worried about, a slowdown, inflation pressures hitting the consumers, we're not seeing it. And Netflix was exactly that when it came out with earnings. They came out with earnings and proved that even though in a place at the moment where it's supposed to be a tough economy, you've got companies like Netflix coming out with profit beats, revenue beats, members, back growing. And this was supposed to be a period of time where people were supposed to be stepping away going, oh, it's a bit of a tough time out there. I'm going to cut back my spending. Bank of America just proved that was absolutely, a load of rubbish. Netflix just proved that, for what was supposed to be a horrible period of time, people are still using the Netflix subscriptions at the moment. And this is very bullish at the moment, because when we look at the market is pricing in, a financial crash, a massive financial crash. And that's not what's happening at the moment. You have stocks like Netflix down 70%, even though the profit's down a little bit at the moment, but it doesn't deserve the share price to be down 70%. And this is what happens. And the funny thing is, I was on my phone, and what happened is CNBC came out with this interview they had with the CEO of Goldman Sachs, and they basically said, there's a good chance of a recession, so it's time to be cautious. And it was funny that they plastered that out through all the notifications. They had big stories here. They weren't doing the same thing when Bank of America came out and said, yeah, we're supposed to be having a bit of a tough time at the moment, but it's not looking that bad out there. And it's same like when you look here at the moment, we're actually technically right now in a recession. We've had 2 quarters of GDP growth going downwards. But you'll see here that compared to like the CV situation where we were down, 4.6%, and 29% here, you see that we're only down 1.6% and 0.6% at the moment. And when you look at what's happening in the stocks, you're having the S&P having a major crash, the worst stock market for 40 years. You have Netflix losing 70% of the value. And this is the problem. At the moment, the bears are in control, but they're losing a little bit. They're getting a few of these uppercuts in, and it's like, right now we're supposed to be a horrible time for the market. And yet you're having, Bank of America coming out and saying, look, people are still spending. You got Netflix coming out and saying, yeah, we're still doing okay. We're still growing users. We've still got members growing. And people are supposed to be cutting the Netflix subscriptions. And this is the thing, you've got stocks just like Netflix that have lost 70% of the value. And it's not really showing on the financial side. Without doubt, there's been a few stocks that maybe had a little bit of a rich valuation. Maybe they're having a little bit of a slowdown this year on the profit side of it. But it doesn't justify the drop that we're on at the moment. And the thing is the longer we stay down here, and if there's more and more companies this earnings season that start posting these financials, some pretty good financials, when we're supposed to be very much in a financial crash at the moment, that's when the market starts wobbling, and the market and investors on Wall Street start doing what's happening to Netflix right now. And you've got Netflix that since that May time is up, over 50%. You're going to have more and more stocks start joining this list where investors go, this valuation is ridiculous. The metrics are half what it is normally on an average. Historically this is half the averages of what it normally is, and the business is performing quite well, and we've sold that off for 70% on the share price. we need to get buy-in. And if Netflix at the moment carries on doing like these sort of things, if we have other businesses joining Netflix, it's going to just kill the bears off more and more. And what we're going to have in towards the back end of the year is people looking at the situation and going, you know, we're having a bit of a slowdown, but we shouldn't be this low on a lot of stocks. And people will start jumping in and we'll have a bit of a rally into the back end of the year. So Netflix is the first kind of uppercut in here for the bulls on the bears. And if we get more and more of these this earnings season, obviously we've got Tesla tonight, we've got Snapchat. Next week will be a big one, because if we have the likes of Microsoft, you know, backing it up, Apple backing it up, and the other stocks like that, it's going to be in my opinion, a bit of a turnaround to the back end of the year, where we see a lot of investors start jumping in and start taking that risk on a lot of these stocks that are beating down. And Netflix was the proof of that. People were jumping into Netflix and going, this is way too low for what they're doing. Like, these financials are still okay. We should not be having Netflix at $170 or $160. We need to be buying. So this was a very good earnings report from Netflix, and no wonder the stock is up today. And in fact, I would say that I'm actually really surprised to see that hasn't dragged the market up even more as well, because I would have thought that a few people would have seen Netflix's numbers and go, what happens if Facebook does exactly the same? What happens if Amazon does exactly the same? What happens if Disney does exactly the same? So yeah, we'll see what happens here, but I thought this was interesting. Very good news for the bulls anyway. And yeah, we'll keep an eye on this and see what happens going through earnings season a little bit more. Hope you enjoyed the video anyway, guys. If you are on the Patreon, we did drop a half-an-hour live Q&A session last night, so go watch it. If you aren't on the Patreon and you want to see 2 more exclusive videos a week from me, and also send a few messages on the Discord where we have 600 members on, join through the link in the description. It's only £5 a month, which I think is very much worth it for the time and effort I do try put in there. It's probably why it's the highest YouTuber to Patreon count on the YouTube scene at the moment, which I'm massively proud of. So yeah, hope you enjoyed it. Smash the like button if you're new, subscribe, and I'll see you in a bit.